Good afternoon, everybody. My name is Michael Camo. I'm Director of Content for T3 Live. I'm here with my good friends Sami Abusaad and Derrick Oldensmith. JR Romero is serving a 1-week suspension. We can't release any further details on that, but we expect JR to be back next week. Okay, so today's show is going to be a bit unusual because we are going to take a look back at one of the wildest times in market history, which was the COVID-19 pandemic. I kind of had a moment a couple of weeks ago. I was watching Zero Dark 30, and I was thinking, seems like people have forgotten about that time period in America. And it made me think about how COVID is sort of starting to go into the rearview mirror. So, and it came up during last week's live stream. So I wanted to go over kind of how things have changed and maybe even what stayed the same since that time period. And we will talk about the market first, and we will get into ideas later. So we'll kick it off with Sami. You talked about at the beginning how the market is all of a sudden looking shaky. So what are you seeing out there?
Okay, yeah, the market, basically I talked about, I saw a reversal bar on the weekly chart forming this weekend. And I talked about it yesterday before the market even dropped. And I said, that's why I'm bearish and I expect the market to drop. And if we drop below that doji bar on the weekly chart of the Qs, then we might have further to go. And so that's what's happened in the market. If you look at the weekly chart of the NASDAQ 100, the QQQ, we had a nice reversal bar, and we've had a nice drop. We'll see where we close, but I think we're headed back down to retest the August 1st low, which is a pivot on the daily chart of the Qs and the SPY. We'll see. The thing about the market is that it's hard to bet against a real nice grind on the daily chart of the SPY and the Qs. That's a difficult part about it, is that I never want to bet against a nice grindy market. But then, sometimes you notice certain things. And that's, I think, what happened this time around with the market.
Okay. Derrick, so we are seeing stocks like some of your favorites like Palantir are getting knocked around pretty bad. So what is and I'm just joking. So Derrick was notably bearish on Palantir last week. So Derrick, what are you seeing out there?
Yeah, so what the big change right now is the dispersion and rotation has switched on which companies are getting hit and which companies are holding up. And now, because we're hitting down some of the largest market cap companies, it's creating a downside move in the S&P and in the NASDAQ. But if you looked at the RSP, if you look at the daily chart of the RSP, if you looked at the RSP yesterday, that's the equal weight S&P ETF. It finished green yesterday, which is pretty incredible when you think about how the Qs, that was a nasty looking daily candle yesterday. So that means that the dispersion isn't done. We haven't gone into a full-on bear market. It's just that the components of who's benefiting from the dispersion have changed. They're rotating a little bit out of the most crowded trades, out of NVDA, out of Palantir, and they are buying safety trades. They're buying value. They're buying consumer staples and utilities and those types of stocks. But we are still in an environment here of dispersion. And to me, that means that we can't go into more of like a real bearish type market until we see correlations begin to increase a little bit further. I'm closely watching this SPY 636 today. I think if we close below 636, if we close below the 21 EMA on the daily chart, which is very near 636, that the S&P doesn't become bearish, but I would describe it at that point as neutral. So like I like to look at the market, I almost play this game with my traders. Look at a chart, bearish, bullish, neutral. And the answer to that question kind of dictates, broadly speaking, what you should do. Obviously, there's other factors to consider, such as extension. But I think if we get a close here, all it's doing is putting the SPYs into more neutral territory. I don't think anything is particularly broken, but it is notable that we're starting to enter into a period of seasonal weakness, and it's notable that the systematic bid that really helped to boost this market higher the last 3 months is no longer a tailwind for the market. They're pretty fully in the pool. So, losing the leaders, Sami just mentioned the idea of you know, he seems like he's more bearish, but there's always the potential the market could go into an upside grind. What about a downside grind? A downside grind where there's still some dispersion happening underneath the surface, but the NVIDIAs of the world, which just got, I think, so over-owned, are weaker. And then because their market caps are so large, you actually see the SPYs or Qs go into a little bit more of a downside grind. I think it's actually only if you can really clear through that 6,200, that August 1st low that Sami just mentioned, that the market actually becomes bearish. And if you hit that point, then you're actually beginning to trigger some of the systematic selling to come into the market as well, which we're really still not seeing at this point.
Okay. All right. And guys, let us know out there in the chat. Are you bullish or bearish on the market right now? Are you freaked out about Jackson Hole? Do you think Powell's going to throw a monkey wrench at us and screw everything up? So again, type in the chat what you think of the market.
Mike,
okay.
Can I just show my charts for just a second, if you don't mind?
Please. I love charts.
Okay. So there you go. So this is the daily chart of the Qs. Okay. What my point was, it's very hard to try and predict the top when there's a grind up like this. It's just a grind. And so it's very hard to predict the top. But what I saw happening on the weekly is we got that really nice reversal bar. So I figured if we break under it, we should be lower. Okay, we broke under it and we did drop. So take a look. We broke under it. We did drop. Now what? Now do we, you know, how much more downside do we have? It's not that easy, especially since we have a nice grindy uptrend. So what I said at the start is that we might be looking to retest this prior low, and if we do, then for me it's neutral. But honestly, on the daily chart, I mean, if we take out today's high, if tomorrow we take out today's high, that would be back to bullish pretty much. If we take out today's high, it's unlikely, but if we do tomorrow, we would trigger a buy setup. So it's not that easy to tell really whether the market is lower or higher. And if you want to make it more difficult, look at the SPY. That's even more bullish. If I told you short at the rising 20 here, you'd think I'm an idiot. You would rightly. Can you guys hear me?
Yeah.
Yeah.
Okay. Sorry. So if I had told you to short at the rising 20 there on the daily chart, I would have been an idiot. So where are we now? We're exactly right at the rising 20. So, okay, the weekly has a bit of a reversal bar, a peekaboo new high failure. Okay, does that mean we drop a little bit? Sure, but don't forget about the daily chart. That's not a bearish daily chart. So it's not an easy call on the market. In the longer term or even the medium term. The short term, yes, it was an easy call for me because the Qs already was on the hourly chart, had turned bearish, lower high, and I kept telling the room, you know, lower highs, lower lows. We have a declining 20, so should be bearish. And I pointed out that reversal bar on the weekly chart, and sure enough, the market fell apart. That was yesterday. But now that we fell apart, it's not that easy. It's not that easy.
Okay. All right.
The big signal also, I think, that I was telling my team every day to look for was NVIDIA. Like NVIDIA got into this range and it stopped accelerating higher on the last market move up in the market. And every day I was like, can we really break through this like 179.50 to 180 area on the downside? Or do we break out through 183.50 to 184 on the upside? The answer to that question is going to dictate whether or not this market can give a real pullback or we just break out and continue. And then yesterday, we really kind of had that collapse in NVIDIA that seemed to trigger everything else.
But going forward, it's not that easy, I guess, until we
sure.
get a little bit more information.
I totally agree. And that's what I was saying with the SPYs. Like this SPY pullback here, at best, it's bringing the market from bullish to neutral if we get a weak close. It's exactly like you said. We're just closing in on a rising 20-day, a rising 21 EMA on this market. I can't look at that SPY chart and say that it's bearish in any way. The Qs are a little bit more damaging just because, again, market cap weights have such a big impact on what these charts look like.
Agreed, 100%.
Okay. We're gonna move on to the darker times. So in March 2020, T3, or maybe it was February, T3 Live said, you guys are going to work from home. I assumed I'd be out of a job by April, but total opposite. Markets, we hit the big bottom. Markets went crazy. And it was, the bull market of a lifetime. But I kind of want to talk about it from the perspective of sort of the life of a trader during that time. And Derrick, I think you probably went through the biggest change because Derrick was very much a hardcore. I'm in the office early every day with Metallica blasting. And then radical change. And now I know every time I talk to Derrick, he's in like Idaho or Paris or like outer Mongolia or something. And he's sort of become like T3's like globe-trotting trader. So Derrick, can you talk about sort of how like your life as a trader has changed since then?
Yes, I also think it's really incredible that you kept your job through that period of time. Let's see in the chat here. Give us number 1 if you think that T3 did the right thing by letting Mike keep his job. Give us number 2 if you think, wow, what a mistake. How could we have kept this guy on through COVID, and why do we even have him on here now? I'm just messing around, obviously. But yeah, COVID marks like one of the biggest changes just in my entire life and entire lifestyle. I went to T3's office as a prop trader 5 days a week for 10 years. And then all of a sudden it was like, okay, go home. And what that led to, long story short, was I ended up like literally throwing a dart at a map and driving to Buffalo, Wyoming for that summer. Spent the entire summer in Buffalo, Wyoming. It was awesome. They kept delaying the office reopening. I went to Big Sky, Montana. I went to Jackson Hole. I fell in love with Victor, Idaho, got a place there. I ended up driving to California and back. I drove all the way to Tahoe, spent a few months in Tahoe. Should have just went a little bit further. I could have met up with Sami. But it was just, real life-changing experience. And now I do everything I possibly can to not come in the office, which is where I am today. So I show up, maybe once a week in the summer and still have family here. And I still really like seeing Mike in person on occasion. So that's why I come on in. But I also think it's had really big changes over time just in how the market trades. I don't know if it's COVID itself or it's just the broader evolution of the market, or maybe COVID sped it up. But the biggest difference on the market is structurally. And that structure change comes from options. You can just see there's so many charts of it. You guys can do a quick Google search on your own. You can just see the continued acceleration higher of the amount of options activity that is in the marketplace. And that has a very large structural impact on the market, because most of the time who's on the other side of options trades is market makers and dealers, and then they need to hedge those positions. So it was all of a sudden back in that like 2020 period on the way up post-COVID, I remember with Tesla specifically, you started to hear about this concept of like a gamma squeeze for the first time. Everyone was like, oh my gosh, what is a gamma squeeze? And basically it's just people buying call options, causing the market makers who are selling those call options to the buyers to come in and buy the stock underneath it, and just accelerating these stocks higher and higher and higher to the point where sometimes it almost seems nonsensical, and creating these parabolic moves that can last longer than you remain solvent. And then that actually led to a whole bubble period at the end of that 2020, early 2021, which was just an incredible time to be a trader. But as the dust is settled, it is still now all about the options. And it seems like options almost dictate price movement more than anything else. I'm not saying by any means that technical analysis is become obsolete or anything like that because of options. In fact, it's the opposite. Technical analysis works as well as it ever did because it's the study of that price action in the market. And you can see in your technicals those gamma squeezes and those accelerated parabolic moves in the exact same way that you can study the options market and understand the why behind what is actually creating those movements. But now, it was a real wake-up call for me going back to February of 2020, right before the bear market started, to see that, well, the bear market for COVID started the day after FebOpX. And that is not a coincidence. And just learning more about market structure and how it influences the indexes, it's just such an important part of my game at this point. And it really dictates almost everything I do now on a more macro level with my trading, and has added tremendously to my P&L overall.
Okay, now Sami, you've been like trading from home forever. So did anything change for you aside from just more movement everywhere?
You mean less movement compared to before?
Well, I mean in the market, just crazier action. Like, did anything really change for you in terms of trading?
No, nothing really changed because I've always worked from home. I always traded from home. But the market itself was changed all of a sudden during COVID. And if you scalp the level 2, and I've done, there's videos on YouTube that I've put together that you can check out if you want to learn about how to scalp the level 2. But I can tell right away whether there's a smart algo on the other side of my trades or not. And when the market starts to crash, and I've been full-time trading since April of 2007, so coming up on 20 years, almost 18 years. So I've seen what market makers do to level 2, to the level 2s. When the market starts to crash, their algos start to lose money. Excuse me, and so they turn off their algos. 1 second, please. They turn off the algos, and as a result, you can scalp the level 2s quite easily. Whereas now it's not that you can't, you can, but it's not as easy. So back during COVID, you could almost look at any level 2 of any stock you wanted, and you could read level 2 and know whether on a micro level whether it's going to go up or down and take advantage of it. So now you have to kind of be picky and do it more on the stocks that are experiencing shock value, that are gapping down 20-30%. So that's the big difference for me between now and then. And also the swing trading was amazing at that time. Now it's a little bit choppy. So now you don't stay with the trades as long, whereas during COVID you could stick with the trade for a whole month because things were just ripping. So the whole market definitely changed for sure.
Okay, so are you, Sami? Were you saying that sort of these algos disappear and take liquidity along with them?
So the manipulation during COVID disappeared, especially in the beginning part when the market was dropping like crazy. Market makers simply turned off their algos. It's not that there was no market maker on the other side of the trades to make liquidity, but it was more so that the manipulation stopped. And so you could, I routinely had $50,000 days scalping level 2s. You routinely had $50,000 days. Why? How did I do it? Because I could look at level 2 and immediately know what to do on almost every stock I looked at. So now, like today, I'm up $3,000, $3,005 exactly from scalping a couple of plays. One of them was just a gap trade, the JHX, and the other one was a level 2 scalp, the EU. Those were maybe the only two. No, I did one more trade, which was the NBY, which lost money. But during COVID, by now, it'd be up 10, 20, 30. I mean, literally. So it was best of times for sure. It was definitely the best of times.
Okay, and I'll ask both of you guys sort of how did your trading styles change, or if not, like what? Yeah, I'll just ask it that way. Like, what about your trading style changed?
So during COVID, I felt like I was never taking any risk because I was, with level 2 trading, I'm basically exiting if the stock drops below the bid. So I'm literally risking 1 cent. Maybe 2 cents, maybe 3 if I get slippage, but that's about it. So I could put on huge size and not worry about it at all because like I said, I'm literally trailing to the bid if I'm playing it long, or if it takes out the offer, if I'm in it short. So I'm risking 1 cent. I can't now do that kind of size, or because there's all that manipulation. It's back and forth. It doesn't just go up, 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 or down, down, down like it did before. Stocks don't do that as much these days. It's very choppy, so you have to be in and out a lot, and you can't do huge size. So that's been a change, of course. But look, we still can do really well. I mean, I come out ahead on the vast majority of the days that I trade. Am I making $50,000 days? Maybe not, from day trading alone. But during COVID, that was possible. Any given day, I could make, in the tens of thousands, any given day. That's not, if I have a day like this, it would be like, wow. I had a day like that in July, and I still remember it. So, that wasn't the case during COVID. It was the easiest time I've ever seen to make a lot of money. Whether you're a day trader, scalper, swing trader, whatever it is, it was the easiest of times for sure.
Okay, all right, Derrick, I'll ask you then a slightly different question. I know that for the late 90s, a lot of people got started in like 97, 98, 99, made millions. And then as soon as things changed, they got wiped out. I mean, Scott Redler talks about this all the time, about how basically everybody he started with in 98 washed out pretty fast after the crash. Do you think, Derrick, traders got spoiled by like 2020, early 2021?
Yeah, so first of all, I saw a very, very similar thing when I first got started trading prop with T3, which was in 2010. I had just barely missed this like 2008, 2009 period where everybody was making just so much money. It was the easiest time ever. All I heard about was how incredible it was. And then I got started, and all I heard was how difficult it was. Trading is so hard. And that probably was a good thing for my trading career, actually, that I started in a little bit more of a difficult time, because it really forced me to learn a very disciplined approach to trading, as opposed to, I think, the guys that started in 08 and 09 who were making money hand over foot. They never learned risk management. They never learned discipline. They never learned what having a limit down means, and making sure that you're always limiting your downside to leave your upside more unlimited. Back in that 08, 09 period, it was, who cares how much I'm down, I'm just going to keep trading because I'm going to be able to make it all back, because trading is so easy. We certainly saw the same thing kind of occur during the COVID period of time, right? You had all these people who had never traded before, who are getting involved in the retail world and buying options, but they're not even sure what options contracts actually are, and making hundreds and hundreds of thousands of dollars. And I think that most of those guys either washed out fully in the 2022-2023 period, or if they made it through that period of time, it's actually because they're evolving into good traders. I think that those people are washed out. I can't tell you how many calls, because now I'm involved in business development for T3 Trading Group's proprietary trading business. I speak to people all the time who are interested in getting involved in this business. I can't tell you how many people at the end of 2022 I was speaking to who are like, oh my God, I made so much money last year in 2021. I had never traded before, but I made $500,000. And now in 2022, I lost all of it. But then I found out I still owe this. I owe all this money to the government in taxes, and I don't have any money. And one of two things were happening at that point. Either they were quitting the business because trading is difficult, or they were reaching out to T3 and saying, hey, I learned that this business is not as easy as I originally thought it was, but I really love it. So I want to learn to be able to do this properly. I want to get involved with T3. I want to get involved with a Sami Abusaad and really learn things properly and get involved in this business. So that's kind of where I think we're at now. I know we're seeing things get a little crazy again with the Wall Street bets and all that fun stuff. But I think at this point, if you got started during COVID and you're still trading now, you're probably doing something right.
100% agree. If you got started during COVID and you're still around, I mean, keep going, because 99% of the people that came through my room, came through, that I met while at T3, are long gone because it was the easiest of times, and they thought it was that gonna last. They thought it was that easy, when in fact it isn't at all. It's not at all. And I agree, it was probably good for you that you missed the 07, 08, Derek, because you might have also fallen for that. How could you not? You might have also thought, oh, it's that easy, and then when the tide turns, you realize it's not as easy.
Starting in a really easy environment, I think, is a great way to develop a lot of bad habits, and then breaking bad habits is such a difficult thing for people to do in any aspect of life.
Agreed.
Yeah, like if you guys want to laugh, because in 2020 every stock I bought up went up a ton. I actually thought about like opening a T3 prop account, because I was like, oh, if I can make this much money with this little money, imagine what I could do with like 15 or 20 times leverage, which would have been the biggest friggin' disaster of all time, with like crap like SOFI that got absolutely destroyed in 2021. But it is, it's interesting with human nature. I feel like people can never learn without suffering themselves. Like they have to touch the hot stove. It's not possible. Everybody has to learn the hard way.
Agreed. That's what we call experience. Without it, no amount of preaching is gonna get you over the hump. I mean, without experience. I agree. By the way, Mike, you're too hard on yourself. I mean, I can't tell you how many times Mike messaged me about a stock and it exploded, and he was exactly right on the money. And then I do a webinar with him 5 minutes later, and he's like, "Oh, I'm the biggest idiot." Bro, you're either trying to make us look better, or you're just too hard on yourself.
I'll give some life advice to everybody who's listening. If everybody thinks you're the stupidest person in the room, you have won.
Well, if you think you're the smartest person in the room, you've lost, probably.
Absolutely. I like to take everybody by surprise. Okay, so before we get into ideas, we did get a request for some food talk, and we're going to keep this very quickly. Okay, gentlemen, you're 24 years old. It's 3 a.m. and you're really drunk, and you're ready to make a very, very bad decision. And so what are you going to eat? And I will give you guys a minute to think about it. I know I will eat some very odd looking slice of pizza that has like 5 toppings on it that looks like it's been sitting there for like 7 hours. That's what I'm going for, is like a very, very large, disgusting looking slice of pizza. Again, you're 24 years old. You're drunk. It's 3 a.m. You just walked out of a bar or a club. What are you eating?
Bagel with cream cheese. That was the thing. Was I was going to really more probably when I was when I was under 21 and leaving the bars, was getting to the 24-hour bagel place in Oceanside, New York, and getting an everything bagel with cream cheese and just hammering that down at like 4:30 in the morning in my dad's basement.
It's very sad. There are not that many 24-hour bagel stores anymore in New York. It's really sad. Okay, Sammy, how about you?
I have no idea. I just don't know. Whatever I can get my hands on, if I'm drunk and high. But I don't know. I have no idea.
Okay, well, we will drunk and high. Okay, so next week we will rephrase the question. We'll include some magic white powder. I'm going to give it some credit. Half of a frozen Carvel ice cream cake that's been in the freezer for months. So you're saving it for a special occasion. Wait, Rolando, are you in New York City? Because Leo's Bagels are probably my favorite here in New York.
I don't know if I know Leo's.
Leo's is the one in the financial district by our office.
Oh, okay.
All right. Okay. All right. So it is almost time to close out the show, but I'm thinking about selling my 5 shares of Tesla and rolling into something more lucrative. Is there anything worth buying? I will ask the boys. Sammy, Derek, you guys have anything?
Yeah, I like the solar stocks. They're looking kind of hot. I'll share my screen. 1 second. Okay. All right. Believe it or not, I was scalping while we're talking. So okay, let's take a look at the. So I'm noticing, a lot of these solar stocks are turning pretty bullish, and my favorite would be that SEDG. I was actually in it when it popped, and I raised my stop to this bar's low, and of course I got shaken out right here. So I'm looking to get back in if it takes out the highs with a stop under this bar's low, or if you're looking to hold it long term, maybe under the big red bar's low. So that's solar. I like the Guild longer term. It's just so bullish, just incredibly bullish. It's got a daily buy setup, so I like that. The UP, the up, if it can stabilize a little bit, because I like the weekly a lot. I like the monthly on it too, but the weekly more so. So if it can, stabilize and not fall apart and then go back up and take out the highs, that would be nice. Let's see, what else do I like? I like the IT. It's not that easy because it's not that clean, but I like the sell setup failure right here and then a breakout. Now, the reason why I like it is because it's down so much. That's the weekly. Here's the monthly. So these are a couple ideas. Is there anything else that I like? I don't know. There's some okay shorts, but I think that's, those are the ones that I like the most. Believe it or not, the NIO, the NIO is, I don't know what's going on with it. This is turning a little bit bullish. The NIO is kind of interesting. I'm waiting for it to kind of clean itself up a little bit, tighten up on the basing, and maybe play a base breakout. So we'll see. But I think those are all the longs that I like. There's a couple of shorts too, but I feel like, if you're not already short, it's a bit late because the market dropped quite a bit already. There's this FNKO as a short setting up. So it looks lower tomorrow under today's low, if it breaks today's low. And then there's the TNDM, similar concept, gap down, and it's basing. It already triggered today though. So those are a couple of shorts that I like, but the majority of the plays that I'm watching right now are long, not short. The shorts already triggered. And that's it. Not too many.
Okay, Derrick, how about you? Is there anything you like here or anything you really don't like?
Yeah, so if you're asking me what I would buy, the answer is not much, because I just really don't like this market in this period of time that we're entering right now. Scalpy day trades, sure, all the time. At lows today for the market and for a few stocks, we had gotten pretty extended down with some of these names. It created for some really good, shorter term buying opportunities, and I'll always be taking those day trades, but you got to be in the VTF with me in order to actually hear those call outs as they come in real time. If you really made me buy something, I still like the Google chart a lot. I think Google is maybe the best of Mag 7 to own. Even now today, it just pulled into its 21 EMA on the daily chart, and it's kind of snapping right back. So I think that Google is still showing a good amount of relative strength there. Apple maybe on a little bit deeper of a pullback here, more like the 225 area, something that I would consider taking a look at, or Meta in a little bit further down, and it didn't quite get to where I wanted, like a little closer to a gap fill from its earnings report, down to 725. I would have looked at, but honestly, I'm really more interested in shorting bounces back in some of these names that broke, honestly, first and foremost Palantir, than I am the long side. Palantir was just a great trade lower. This thing just dropped from 190 to 143 or whatever today's low is, in just a handful of days. Is not where you want to chase it short, but I'm really going to be looking if this thing gets back into the 160s for an execution opportunity to kind of reshort. So we will we'll see what that looks like when it gets up there and triggers. Like Sami just said, I'm a very, very big believer in not chasing price. Anticipate, don't react. Anticipate the breakdown, short as things are actually breaking, and then reap the reward when other people are chasing price. I'm a big believer in not chasing price. And a lot of the shorts today, it looks like you're chasing, but I'm keeping stuff on my radar for bounce backs, and structurally as this market changes here over the course of August and September. That's the side that I'm planning on leaning towards until the market really proves to me technically that we are back in bull mode.
Awesome. Okay, Derrick, thank you. Okay, everybody, thank you for joining us. We hope you had a good time today. Hopefully, JR will be back next week after serving a suspension. And with Jackson Hole and all the other stuff going on this week, we wish you luck. And oh yeah, we will be talking NVIDIA earnings next week, because that is the joy of earnings season. So again, everybody have a wonderful day. Sami and Derrick, thank you for putting up with me for one more week.
Anytime, buddy.
Anytime.
All right, guys. Thank
I
you
will
all.
remember that. All right, bye, guys.